What's up, guys? It's Mr. Fit to Flourish, and if you're losing a ton of trades, here's an easy, sure way fix, actionable steps to take in order to start winning. Okay, we all know exactly what we're doing. We all have that intuition of, oh man, this play might be a little too risky to get in, and then you get in anyways. Well, here are some steps that we can take. Okay, because every retail trader is doing the same exact thing. We're doing the same exact thing. So, losing plays. What are some losing plays that we all get into? Well, a lot of us are jumping in to plays with no signals or key levels. So a lot of people will look at my TikToks and be like, oh, he said the market looks like it's going up. And I say that, I say, hey, the market overall is going up. But if it breaks below this level, then you don't need to be getting into calls or going long. And I always get that random message or the random comment from someone the next day like, oh, you said the market was going up. I bought calls and I lost. You don't know how to trade. Leave me alone. You don't know how to trade. Okay. So you're jumping in with no signals or key levels. Okay. You're probably just jumping in just because someone that you're watching says the market looks like it's going up. Well, guess what? I didn't get in that trade because I saw at the beginning of the day that it broke down. The stock was breaking down and the market was bearish that day. Okay, there was overall bearish sentiment. So you need to jump in when you see key levels broken or with good signal bars. And then some people will like to swing with no news, swing options with no news. And if the option is less than 3 weeks out, then it's likely that it can decrease in value extremely quickly. Now, these are the top offenders for making people lose money. Jumping in for revenge. Jumping in after a very good play. Typically, your ego goes up and you just are like, oh, I'm on top of the world. Let me jump in. Don't do it. Do not do it. Using trend lines for breakouts. So sometimes if you use a trend line for a breakout, it could be a false breakout. You want to pay more attention to horizontal levels. And then jumping in to a trade before a bar closes. Sometimes you might see a big green bar forming and you just jump in. But what you don't know is that that big green bar is going to become a wick. Okay, it's going to become a topside wick. Another thing that a lot of people are doing that is absolutely destroying their accounts is they are gambling. Okay, they're gambling on earnings. During earnings, there's a super high implied volatility on options, which means that the IV is typically over 100%, and the the option price can change extremely quickly, very dramatically. So you might buy the option contract today and it's $500, and then when you swing it during earnings, the stock doesn't really move, and your option contract goes from $500 to $10 because the IV, the implied volatility, is super high on these earnings contracts. So a lot of people gamble on earnings. A lot of people are always asking me, hey, what do you think about this stock for earnings? What do you think about that stock for earnings? It doesn't matter. Okay, it doesn't matter what I think. It doesn't matter what you do. Go and lose your money. Feel free. Bye-bye. Because I don't do earnings gambles. The only time you should trade earnings with options is if you have insider information. Yes, I said it. If you have insider information or there's overwhelming evidence that the stock will be moving in one direction over the other. And really that never happens because recently you can know that a stock is going to beat earnings like Nvidia, but the stock will start to sell off, either due to bad guidance or just because investors feel like it and it didn't meet their really ridiculous expectations in this new age of trading and YOLO and FOMO trading. So really good things to kind of look out for. Another one I wanted to just touch on is holding a gain and hoping it keeps going bigger. So I get a lot of DMs on this too. A lot of people are DMing me like, hey, I just made 300% on this play. Should I hold it or should I sell here? Like, what? You never make 300%, okay? And you've never seen this much money in your life. You need to cash in. Take what the market gives you, okay? And understand that you'll see these gains consistently if you consistently put on those trades. If you study why that trade was so big and study what a good trade like that looks like, then you can consistently make it. But the fact that you're asking me, should I hold this? I know you are a YOLO trader. I know you're a FOMO trader. You're not going to be in the game very long. I can tell you that. All right. So one person asked me to, hey, show one of your losing trades and what it looked like. So a lot of my losing trades are whenever I go against what I've been studying or what I know to be true. What do I mean by that? Well, one of the rules that I set up, so I have a system of rules. I made a video on that. Go check it out. But one of the rules I have for day trading, and I day trade options, is really not to trade before 10 a.m. Okay, sometimes I'll scalp before 10 a.m., but really, you shouldn't really be putting on a trade before 10 a.m. They're pretty low quality trades, and we know 10 a.m. Eastern Standard Time, we typically get a market reversal. So we can see here, we have a move to the upside, and then we start to sell off pretty hard. We formed a huge bear bar on the QQQs, 5-minute time frame, huge bear bar, and then all of a sudden, it got bought up. We put in a micro double bottom here. And then right at 10 a.m., we get a reversal. We reverse back to the upside after this reject. Okay, made this huge move up. I think we ended up getting calls. I ended up calling out some calls, and these calls went up pretty big. We got 0 DTE calls, and they went up extremely big. So made a ton of money there. Okay, and then on the way down, it looked like we were getting this 920 crossover, but I knew that we had this key level here, and we were doing a resistance to support flip. Okay, and I literally said, okay, I know that we should break this level. Once we break this level, then we can have a high probability of puts to the downside. When key levels get broken, we'll have a high probability. Even though I said that, I still YOLO'd in and got into puts prematurely because I wanted to get, a bigger gain. I didn't want to wait for the break, for a good break below. I just wanted bigger gain. So I got in prematurely, and we ended up getting a reversal against me, and that knocked me out of my trade because my stop loss is always going to be one tick above my entry bar. And this was my entry bar, so I got stopped out. Okay, and why? It's because I didn't wait for the break below. I knew we were going to get a break below that level, and I said when we do, this stock, QQQ, is going absolutely down extremely quickly. And guess what happened? Later on that day, once we got the break below, we absolutely flushed. Okay, and that's what I needed to wait for. I didn't wait for that break. Okay, but I did come back later on in the day after we did get that break, and it sold off. Okay. So just a couple things in terms of, this is why we lose trades, okay? Lose trades, a lot of the trades you're losing, you're gambling on earnings, you're YOLOing, you're putting too much money into the trades, and you're not sticking to your rules. So we cut out all that noise, then we're good to go, and we're winning. We're winning. You just got to stay consistent and do it over a long period of time. And then next thing you know, you'll be able to size in a lot more because you have a lot more capital. So let's stay consistent, stick to our rules, stick to these solid trades. But when there is massive opportunity, that's when we put on a lot of size. When it's an easy money setup, we put on size. But when we're trading, we stay consistent, stick to the rules, stay consistent, stick to the rules. Small size with options, small size, because it needs to be an amount of money that you're willing to lose, because options are inherently risky and they can go to zero. So let's consistently put on that small size. And then when the opportunity presents itself, when it's something you've been waiting for, or there's a ton of news or a huge momentum, some GameStop play, right? Then we'll bet the ranch. We'll put a lot of size on, a lot of risk, because opportunity. Okay. Opportunity is a Hafti goddess who does not waste time with those who are unprepared. So stay prepared so you don't have to get prepared. Okay. Hopefully this helps. I hope you guys have a great day. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.